Is your money working for you? The best way to hedge volatility and inflation is investing in commercial real estate with REEF. That's RREAF.com/investor. Skip the crowdfunding sites and invest directly with REEF. REEF owns and operates each investment, cutting out the middleman and providing investors with exclusive off-market deals. There is no better time than the present to explore our lucrative portfolio of commercial real estate. Open to accredited investors only. Visit RREAF.com/investor.
Boy, the real estate market, if you are trying to buy a house, if you've been trying to sell a house, if you've been looking to find your dream house, you know things are really, really difficult right now. It's confusing. The market is kind of all over the place. And especially if you're just jumping into the housing market, there are just a lot of questions that you might need answered. And so we thought, why not bring in a friend of the program? He is a contributor. You see him regularly on KUSI TV. And for the past 18 years, he's been helping buyers and sellers all over the Inland Empire. You've heard him here on this station before. Jim Bottrell, CEO and owner of the Jim Bottrell Real Estate Team, is with us. Welcome to the Inland Empire Answer. Merry Christmas a little early to you, Jim. So glad to have you here today because it is a really confusing time for buyers and sellers.
Yeah, it is. It's been a real ride. Thanks for having me, and I'm happy to answer any questions you have.
Well, let's just start with kind of the basics. We know that in early 2022, sellers were enjoying over asking prices and refinancing deals that were once in a lifetime opportunities. So what happened? How are buyers and sellers adjusting to this new reality of real estate?
Well, not well. What happened? So you have two questions there. So the first part is what happened? Well, what happened is the Biden administration and the Fed were really late to the inflation party. Inflation wasn't fake, it wasn't transitory, and it certainly wasn't Russian disinformation. Everybody saw it coming like a freight train. That is everybody except for the administration, Fed, and the Treasury. So once they realized that they could not hide inflation anymore, they went into crisis mode and then conducted the fastest artificial increase in interest rates in U.S. history. So just over the last 12 months or so, interest rates have pretty much tripled. And they went from 2.5 to a high of 7.5 that we saw in mid-November. And that artificial increase of interest rates just crushed the home buyer's ability to buy a home. Not that they don't want to buy. There's plenty of demand out there, but that combination of the high interest rates and the high prices has made it untenable for a huge portion of the population. It's easy to fix, though. You know, demand has not gone away. There are people who want to be homeowners. They just can't be right now. Mm-hmm. It's that artificial increase in interest rates that's preventing from people to buying. Second part of your question is, how are people adjusting? Well, I'd say slowly. The market is very different today, and it's not going to be the same for probably quite some time. Buyers right now, especially right now, low motivation. It's the holidays, so there's always low motivation during the holidays. They are afraid of future price declines. There's all kinds of people talking about a crash, and they're saying, look what happened in 2006, whatever. It's totally different. They're looking at prices are still high, and they are still experiencing interest rate shock. Sellers, on the other hand, they have low motivation once holidays. And then the sellers are still, they're still not accepting the realization of where prices are, mm-hmm. that prices have come down. There's a lot of them that still expect what their home is worth in May. They're saying, well, how come I'm not getting 75 offers on my house, $100,000 over ask? Because, 4 months ago, 5 months ago, that's what my neighbor got. And it's just not May anymore. There are going to be fewer transactions. It's not going to be a good time to be a realtor for the next couple of years. I will say that. I'm predicting there's going to be a saying that homeowners will say is, I used to love my home, but now I love my interest rate.
Right. And
what that means is people aren't going to sell and give up that 2% or 2.5% interest rate. They may own a 3-bedroom, 2-bathroom house right now that's got a 2.5% interest rate. Maybe their family grows a little bit, and they say, hey, let's get an extra bedroom and a bathroom. But that new house comes with an interest rate starts with a 7. They're not going to do it, so that would effectively double their payments. So what are they going to do? They're going to double their payment, or they're going to put bunk beds in the kids' room. Well, it's bunk beds in the kids' room. So there's not going to be a lot of transactions. That's going to be the reality of it. It's going to be tough for realtors, escrow, lenders, basically anybody in the industry. It's going to be real tough for the next couple of years. And buyers and sellers can be tough for them too. Not impossible, but just tougher.
So basically what you're saying, though, for sellers, the market has normalized. Homes aren't flying off the shelf like they were. So what's your advice for sellers who are thinking about selling right now or who might be planning ahead to sell in 2023 after the holidays wrap up?
Well, I say this all the time. Do it now. Right? It's not going to get better for you right now. If rates stabilize, then prices stabilize. If rates go up, then prices are going to go down. That doesn't work to anybody's advantage. The thing is that we know what prices and rates are right now. And I would expect that interest rates will go up in the near future. So if you want to make that move, you want to upsize, downsize, or do what 81% of my sellers do is leave California, I would say do it now. Waiting for prices to come back up is a common thing with many sellers. They think I've lost too much. I have to wait for it to come back. That may take a little bit of time. And nobody sells a house to become a renter. That just doesn't happen. They sell a house and they buy a house. So, it all comes down to a person's why. And when I meet with people that are looking to sell a house, I spend a lot of time learning about their why. And sometimes I tell them not to sell. I mean, I'm the realtor who will sit in somebody's house and say, yeah, it's not good for you to sell your house. But then other times I point out, when I'm finding out what their why is, I find out the important things that maybe they just aren't realizing. Like, for example, I sat with somebody not too long ago that was wanting to sell. And then when it came down to pricing, they said, no, I've lost too much money. I can't sell my house at this price. But their why was that they're, retired couple, they want to move to Tennessee to be with their grandkids who are 5 and 7. And they're saying, no, I have to wait for the value of my house to come back before, they had an expensive house. They've lost probably $150,000. I have to wait for that to come back before I can move to Tennessee. And I pointed out and said, well, that could be a long time.
Right.
And how long are you okay not being with your grandchildren? That could be years. It could be before you get back to that. And there's also a concept of a rising tide lifts all boats. If you wait for that house here to go up by $150,000, well, guess what happens to the house in Tennessee?
It's going up too.
You haven't changed anything. All you've done is lost 5 years of the grandkids. So, I'll point things like that. So that's my advice to sellers. If you're thinking of doing it, I would say just do it now. Everything is a known entity. If interest rates go up, you were the genius that got it an interest rate probably in the low to mid sixes. If they go down, refi.
Refi, exactly.
One of the great things you can do. Yeah, it's one of the things you can do as a homeowner. You can't do it as a renter. You can't say, hey, I'd like to cheaper rent, but you can do it as an owner.
And that's really, really great advice. Jim Bottrell is with us. JimHasTheBuyers.com is the website. JimHasTheBuyers.com. You can also call him if you have questions on any of this. 8335. Call Jim. 8335. Call Jim. And buyers, affordability is pricing them out of homes in many cases. So what advice are you sharing now for those who are looking to buy, Jim?
Well, it's interesting. I say do it now because today is a known entity. With Powell running the Fed and Biden running the White House, I have no idea what the future holds. Those guys, they surprised me a lot. The good news is that recently rates dropped to the low sixes. So we were in the low to mid sevens, and now we're in the low sixes. There's a holiday advantage. So if you're thinking of buying a home, I tell people do it during the holidays. This is a strategy that I've used for a lot of my adult life. In accumulating properties is I pretty much always buy a house in December because there's a holiday advantage. You can actually get a deal on a house during the holidays because most buyers will leave the market during the holidays. Buyers are fickle. They'll come in, they'll start looking for houses like, oh no, we're going to wait till after the holidays. We're going to pick it up in January, something like that. But when sellers on the market, they stay on the market. So now I have reduced competition and I can use advantages over a seller during the holidays. And I'd say that if you are thinking about buying a house, do the opposite of what all the other buyers are doing and get in right now versus, after Super Bowl when they all come back. The other big advantage is we know that rates dropped a couple of weeks ago. And now we're seeing, they went from the low sevens to low sixes. A lot of my buyers are using what's called a 3-2-1 buy down. Okay. And we're getting the sellers to pay for it. And that's what's fantastic is the advantage we have right now is we get the sellers to pay for it. So let's say hypothetically the 30-year fixed interest rate is 6.25. If you get the seller to pay for this 3-2-1 buy down, your first year is 3% off of that, so you're at 3.25. Second year, you're 2% off, so you're at 4.25. Third year, 1% off, 5.25, and then full at 6.25 for the remaining 30 years. If rates drop, then refi into the lower rate and have that as your 30-year fixed. If rates go to 10, well, then you're the genius that bought when you had an advantage, got the seller to pay for a buy down, and you max out in the low sixes when others are paying 10. It kind of reminds me of back in the spring, I had buyers that were upset paying 4% when their interest rate started with a 4.
Now that seems great, right?
Now they're geniuses. Yeah. So that's my advice to buyers. Do it now. There's a couple advantages right now. Just jump on it. Go.
And it's what we know. And it's not like you're going to get penalized. You're right. You can always look at refi as an option if things do drop down. You're not going to be stuck here, but you may be looking at yourself back going, thank goodness I did it now instead of waiting another year or so while that interest rate continues to go up. So you've been doing this a long time, Jim, 18 years to be exact. Well, over 18 years. Yeah. And you've seen ups, you've seen downs, you've probably seen all arounds too. What does your forecast look like for 2023?
Well, it's kind of a loaded question. It all depends on how bad the recession is going to be. I do not think that we're in a situation to where it's going to be if we have a recession. I think it's going to be how bad a recession is going to be. Regardless whether we have a shallow or a deep recession, we're just not going to see prices go up, not in 2023. Again, it has everything to do with interest rates. We will see a tightening of the number of homes for sale. We've always had a shortage. We simply just don't have enough structures. That's the first problem. Trying to get a building permit for a master plan community in California with all of its environmental rules and everything like that. It takes twice as long to get a development going as it took us to fight and win World War II. That is the truth. It takes forever. So builders aren't going to be able to get us out of this. Then you also have people not wanting to move because they have that interest rate that starts with the 2, so they're not going to trade that 2.5% interest rate for a 7% interest rate. They're not going to. So now what's going to end up happening is people are only going to sell their houses, those that have to sell. Right now, people in California, they like to move just because they feel like it. I've done it. I remember my wife and I, when we bought our second house, we were literally coming home from Costco and saw the guy holding the sign on the street, hey, new houses. For sale, and we pulled in, and next thing 3 hours later, we're in escrow on a new big house, and like, oh crap, we have to sell our old house. That's not going to happen. Right? Those days are over, but that's the way California's been forever. But those aren't going to happen. So what's going to end up happening in 2023 is we're going to see people that probably just those that have to sell, or maybe those that have retired and they are, getting out of California. Mm-hmm. 81% of my sellers, they are leaving California. I don't blame them a bit. And so that's going to be a tightening of houses in the market. There just aren't going to be that many houses for sale, and the shortage of houses will provide support for housing prices. I do not believe at this point in time that there's a crash in the market. I don't see that happening. We're going to have to go into a bad recession to see something like that. I don't know that that's going to happen either, because we don't, when you go back to 2007, there's a whole bunch of things that caused it, but we had a global financial crisis. Our stock market was down. Everything was in ruins.
Right.
We don't have that. We just have interest rates that are too high. That's all we have right now.
And that's really the big change. You're right about that. The cost is cost of living is expensive. Maybe it freaks people out a little bit to think, do I want to take on more of a mortgage? But gosh, I really thank you. This information is so important. Of course, if you are looking to buy a home or to sell a home, there are a lot of questions that might be swirling around. And I know, Jim, you are very willing to talk to folks and answer questions. Jim Bottrell is with us. Give people your information one more time, Jim, just if they want to ask questions or get in touch with you. Yeah,
the consultations are free. There's no cost, no obligations. We're happy to talk with anybody. I love talking about real estate. It's something that I'm passionate about. I was passionate about my being in the Marine Corps, and then when I moved on to real estate, I was passionate about real estate. Because while I was in the Marine Corps, I was making more money passively owning real estate than I was going to work every day.
Wow.
So that's why I fell in love with real estate. So I love talking about it. So give me a call. The number is 833-5-CALL-JIM. That's 833-5-CALL-JIM, or you can visit my website, jimhasthebuyers.com.
I love it. Jim Bottrell, always great to chat with you and catch up. JimHasTheBuyers.com for more information. JimHasTheBuyers.com or 833-5-CALL-JIM. 833-5-CALL-JIM. Jim Bottrell, thanks so much for being with us. Come back again anytime.
My pleasure. Anytime.
All right. There he goes. That's Jim Bottrell. JimHasTheBuyers.com. 833-5-CALL-JIM.